This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe Rabil. So what we want to do today is add another tool to the toolbox here and teach you how to do counter trend trading in a precision way. All right, we're going to look at 4 different time frames here, and each are going to play a bit of a role in what we're looking for. Let's go ahead and get going. Now, I do want to make sure you understand, if you want to learn more about some of these techniques, I would start with my book. You can click the link in the description and it'll give you some more information. Also, if you do enjoy the content, please hit that like button and also subscribe. All right, I'm going to use a stock called Zscaler. ZS is the symbol. And what we're doing here, and I did this on purpose, all right, I'm picking one of the strongest stocks, strongest moves. Look at the move this stock made on the way up. You see how much power there was behind that? I think a lot of people, when they're playing counter trend, they want to play a weak stock. Okay, and what I'm suggesting is we want to actually play something that is strong, but we have to look for certain things, otherwise we're going to get run over. All right, you don't want to play counter trend in something that's so powerful where you put on a trade and within a minute or two you're stopped out because you're playing a tight stop in something that hasn't given off any signals yet. All right, you have to be real patient when you're playing these trades. When they show up, then you pounce. You have to be one of these guys that can sit there and do nothing, and then the instant it shows up, you strike. And so it's a little bit more difficult from a psychological standpoint, I would say. But what I will tell you is that these trades, when they play out, usually are very quick. You can get a 2-to-1 or 3-to-1 risk reward pretty quickly without spending a whole lot of time on these. In other words, they tend to take place, I would say, over a few days rather than taking a few weeks in most cases. All right, so let me just show you how this played out and what you should be looking for. All right, so first off is we get this monster 3-month move on the monthly chart. We get a big, huge jump, and we're stretched away from the 18-month line. All right, so if you look at this 18-month, it's way down here at 212. Price is up here at 300. All right, we want that big air, that opening air. I call it, with my subscribers, I call it an air pocket. All right, we want an air pocket there. But not only there, we want an air pocket here as well. We want to see a distance between the price and its 18 MA on 2 consecutive time frames. All right, so we've got the 18 simple here, 18 simple here. All right, now they haven't separated to an uncomfortable spot. Understand that this isn't necessarily going to look bad from a trend. The 18 doesn't have to be rising at a much faster rate. All right, I want to make sure you understand that. We just need to see distance between the 18 and the price. All right, or you could look at it as the 4 and the price. That's also a really good way to do it. Look at the 4 and make sure it's separating and it's accelerating at a much faster rate than the 18 is. All right, and there's an opening. We've got an air pocket. We want that air pocket to play. All right, that's going to be our potential. How much money we can make is that distance between the 18 and the 18 and price on the weekly chart, on the smaller. So in this case, I'm doing a monthly here, weekly here, daily up top on the right, and an hourly up top in the left. All right, this is just giving us notice. This happens, we can see that we've gone up 3 months. This is a time frame that's given us really the signal. This is what we're looking for, is this stretched away, and it's happening on 2 consecutive time frames. This is the second time frame we're doing it on, so this is the setup time frame essentially. Well, actually that's not completely true. This is just an upper time frame that's giving us some interesting feedback. All right, the feedback is it's strong, but it's way overbought. All right, so those are those 2 time frames. The next time frame is the daily chart, and this is actually the setup time frame. And the setup in this is different than what you might expect. We're going to zero in on this so you can really see it. All right, now notice what's going on. We've got a move to the upside, we pause, we get another move to the upside, we pause, we get another move, we go like this. You see what's taking place? What we want to watch is we want to do 2 things. Number one, we do want to watch the MACD, right? We want to see what's going on, and you can see that MACD stayed above the signal line here. It broke it momentarily here, but then went to a real strong new high here, all right? Confirming the up move. This point, it's confirming the move. Now, while that's taking place, we're also getting green DI confirming the move. You see how green DI is making a new high with price all along the way until we get to this point? All right, then we go through a pause and we make another move to the upside, and we finally make a pivot high here on this red bar. All right, we've turned down enough to call it a pivot. All right, now we've made a pretty big move, and obviously, and we've actually formed another peak. Now we have divergence in place on the MACD, right, making lower, and it's happening below the signal line, and we've got this move down in DI. DI is really starting to come down. Remember, when I'm playing trades like this, like intraday, not intraday, but quick trades, I'm usually focused more on the DI lines than I am on the ADX line. We're playing this for a leg or two. We're not playing it for a trend move. The ADX is great for determining this move to the upside, actually. We want to be looking at the monthly and the weekly, taking a trade maybe off the daily, or just taking the trade off the weekly and knowing that we've got a power trend in place. All right, that's fine to do in the higher time frames with ADX. But when we're looking at this type of trading where we're down on a daily or an hourly and we're looking for a retracement, we can get some signals on the ADX line itself, but we really want to focus in on when we're seeing contraction take place. So the confirmation of this MACD is contraction, and I think this is a real key to helping you out here. So we got this divergence taking place in MACD. I'm going to clear the board so you can really see this. So if you notice, we had this move to the upside. This is a divergence signal here. All right, we get a move to the downside. You could actually have considered this to be triggering to the downside based on MACD, but it wasn't based on DI. And why is that? Because we needed to take out this low and we needed to take out this high. Well, and actually that's not true. We just needed to take out a high, make a higher high here, and really kind of click in. But this was the key. The sellers finally kicked in here. All right, we were making lower highs and lower lows on the buy side. It was sort of weakening, but we really want to see red DI kick in here and break above. That's going to tell you that the sellers are finally showing up. You see how the sellers finally showing up? So they make a peak here, another peak, peak. This is the first higher high. We're making a higher high for the first time all the way through this whole time. No real selling strength until we get to here. If you learn this, it's a massive edge over your competition. I mean, you're seeing something that basically no one else is seeing. Now we can look, now that we have that clicking into place, now we can start to look for a signal. All right. So this is what I'd call a setup. All right. And now we're going to go and look for a signal, and we can go immediately. So that's where I already scrolled this over. That's where this dropped down. It created the signal. I'm going to just show you so to prove my point here. So this is, let me look at the daily chart right here. This is so you can see the, on 7-1 was where it took place to the downside on the daily chart. Now I'm over on the hourly and you can see 7-1. That's where this dropped. So now we have this signal in place and it's a setup. Now we look for a signal, a trigger, an entry. All right. We don't do that simultaneously. I wouldn't take this trade right here. I would actually look for the next signal at that point, because most of the time when you're setting up like this and forming a setup, you're probably not in a great position. You're a little oversold or something like that. Notice what followed though. We had an ABC up, all right, and ended up forming another move to the upside. And you could have argued that this was a, let me clean this off a little bit, do this right. So we broke the trend line here, all right, and we were way above the zero line. You see how these had come above the zero line? So what I talk about a lot with my subscribers is I'm usually looking for some kind of a double top play or a double bottom. If it's a bottoming pattern, this is a topping pattern, but if it's a bottoming pattern, then I'm looking for a double bottom. But on MACD like this, I'd be looking for some kind of a double top. And it's okay if it happens above the zero line, but I just don't want to take the first signal. I don't want to take that first crossover here in that situation. And the main reason is we have a 1, and then this is the 1 here, and then we form the 2 after that. right? We don't need to jump the gun here. We form the two and then look at what happens. And I've talked about this a lot with my monthly subscribers, that a lot of times the big red bar is going to be the bar that is the trigger bar. And it happens, so you're doing this and you're looking for a completion of the 1, 2, 3, and it might not be a big bar, but if it is, even if it isn't a big bar, you're going to take it. But a lot of times it is, just because it is the right place to be shorting, and it's where a number of different schools of thought kind of click in. So we want to be aware when we see these big red bars show up, especially when it is the completion of our signal. You get a double top forming on the MACD. You get a 1, 2, 3 with a big red bar coming back through the opposing trend pattern. 18 is above the 40, and we've got a we got to move to the upside, right? And now we're failing, getting back below both lines to the downside, confirmed by MACD with a big red bar and heavy volume and a red DI that's breaking out for the first time in this move. One of the things you want to be doing when you're putting on a trade like this, all right, is we know that this is the time frame. So it's a different type of trade, because this is the time frame that's the trigger time frame. This is the setup time frame with the bearish pinch play, essentially, but that is confirmed by a contraction in the DI lines. All right, so that's essentially what's happening on the 2 time frames. But this is the time frame we're using for kind of like our target area. And what I would suggest to do here, so we know at the time we've got an entry set up that's somewhere, let's just call it 300 to keep it simple. All right, and we know at the point of trigger, we've got room to about 250. But we also know we have a rising 18 in here. All right, so don't assume. So I want to make sure you understand. So if we get a topping pattern like this and the 18 is tight, so there's not as much room, don't expect it to come all the way. It might not come all the way down to that line because the line is rising. And if you notice, it met up with it around 275, not 250. So you only got half of what you were expecting there if you were using a rising moving average as your target. What I would suggest to do actually is to take what your approximate entry looks like it's going to be, because you don't know in advance. You're gonna use kind of a ballpark estimate and what the 18 is right now, and take the midpoint of that. All right, just play the midpoint of that. We don't need to be a hero on this. In most cases, you're going to get a lot of downside because you're entering off of an hourly and your target is off a weekly. I mean, it's a long way away. All right, we want to make sure when we do this trade that the trigger is below the 18. Let me make sure I say that again. It needs to be below the 18 on the trigger time frame. Obviously, it would be that way 90% of the time, probably 99% of the time, but it also has to be above or below the 18 on the setup time frame. We can't do this trade without being below both. Why is that? Because we're going for a target on the weekly. All right, we don't need to go for a target on the monthly chart, but we want to use that. We want to see that and make sure it's extended, but we want to see how far we can make off the weekly chart. And what I'm telling you is that I would probably look for how far we are approximately from our entry to the 50, and then probably try and get half of that. And if we can do half of that, and it makes sense, it's at least 2 to 1, then I'm taking that trade. That's the example for the week. Let me know if you have any questions. Thanks.